AngloGold Ashanti, the world's third largest gold producer, reported third quarter earnings this morning, and the company had a loss of about $1 billion, mostly because of costs to end hedging contracts. Mark Cutifani, CEO of AngloGold Ashanti, joins us now on the phone from Johannesburg. Mark, thank you for joining us. This should be a golden age for gold producers, you might say, but you guys seem to be having all kinds of headaches. You've got accidents that are forcing you to close mines temporarily, volatility of the South African rand. You've got the threat of higher power prices on the horizon. Your U.S.-listed shares are down some 20% in 2.5 weeks. Is all the bad news in your stock, or is there more to come?
Well, I think we've got most of the bad news there. Certainly, the headline loss was a consequence of the restructuring of the hedge contracts. If you look through that, we've got our second-best earnings result in our history. So certainly, if you look beyond the headline restructuring due to the hedge book, we've got a very strong operating performance. And even with our costs where they are, with the strong currencies, we're still very competitive on a total cost basis. So certainly some challenges, but some very good results, even despite some of those challenges. Certainly looking forward, some challenges in South Africa, but we've made good progress in 18 months and we'll continue to make good progress.
Let us talk a bit more about that hedging, because when you became CEO back in 2007, Anglo was locked into these forward contracts that have forced you to sell gold at below market prices. You just announced that the company is going to be hedge-free, at least you just announced earlier this morning, going to be hedge-free by 2015. Why not sooner?
Well, certainly we've taken almost 8 million ounces out of the book in the last couple of years. We're about $2 million or $2 billion in the black on that transaction, so that's worked very well for us. On a go-forward basis, we look at all of our capital, and at the moment, hedge book sits lower in the priorities against some of the very good projects we've got to develop on a go-forward basis. So based on where the gold price is, we think we've got some very good projects that demand we allocate the resources into those projects.
Does the decision not to end all of the hedging now say anything about your outlook for gold prices?
Well, certainly from our point of view, we think it's in a good place where it is. On fundamentals, we'd expect it to trade certainly in the $1,000 to $1,100 range. There is the potential for it to break out further, and if we have a strong view that a breakout's coming, then we will review the hedge book decision. But at this stage, we haven't seen evidence of that breakout coming, and on that basis, we think we've got the right strategy. But again, we'll never say never, and we'll keep our eye on it very closely.
All right. You were quoted as today, Mark, as saying the state-run utilities' plan to raise power costs is, quote-unquote, not viable for South Africa's gold industry. I understand a bit about the dynamics down there. What is the alternative to raising costs for the industrial users?
Well, I actually made a comment that I thought it was not viable for period. Not only the gold industry, all the mining sector would be hit very hard. The manufacturing sector, the logistics sector, the services sector. So certainly, I don't think it's a viable option for South Africa as a whole. I think we have to come together, government. I think we have to come the workforce. I think we have to come as governments and companies to come together with a better alternative than to just try and recover years and years of neglect in 3 years of price hikes. So I think we've got to come up with something more constructive. I think we can look at further power reductions. We've just been awarded a national award on energy consumption across the mining industry, so we're very pleased that we've reduced our consumption by 16%, but we've all got to do more, and I think we've got to be more lateral, more creative in looking at different solutions. You just can't slug industry with three lots of 45% increase. It's just not viable.
Mark, I'm afraid that's all the time we've got, but I do thank you for joining us. Mark Cutifani, CEO of AngloGold Ashanti.